Welcome back. We're talking to Patrick Ryan Morris this morning. He is Senior Managing Partner at Hagin Capital here in New York City. He is also a partner in the U.S. Indo Growth Opportunities Trust, and that's a fund that invests in small and mid-cap publicly traded companies in India. Mr. Morris, it's nice to talk to you today. Thank you so much for joining us.
It's nice to be here.
Now, one interesting thing that you said was that you actually don't invest in China. Whereas last week we heard from Merrill Lynch does this fund manager survey in Asia, and they said it's because of China's influence that the emerging markets are really benefiting from investors moving money into that area. So what do you think of that?
Well, you know, I think that when you make a decision to invest in the emerging markets, one of the things that you have to do, at least in our case because we're smaller, we had to go where we felt we could actually make an impact. It was our perception at the time, incorrectly or correctly, that China was really being more of a place that larger companies would really be at sort of an advantage. So if you're Merrill Lynch, if you're Coca-Cola, if you're IBM, China seemed like the place to go. India to us seemed like there's more family-held companies. It's a very entrepreneurial country. It's also a democracy, and it's a place where we really felt that we could have sort of more of an impact as a small company.
Okay, so now how important are the elections? How much of a concern is terrorism?
Well, obviously the elections are extremely important, and it's one of those election cycles that I don't think people in the U.S. understand very well. It goes on for many weeks. I don't think we're really going to know anything until sort of the middle of June, probably. I think that either party that wins is fine. I don't see either one being an enormous threat to folks like myself or for foreign investors, but I do think that you need that clarity. And obviously a few months ago when there was the attack in Mumbai, that really focused people's attention on the fact that terrorism is a threat in India as well as it is elsewhere.
Now, some people might ask that with the markets falling so much and with some large cap stocks being so cheap now, why continue that focus on mid-cap stocks?
Well, actually, one of the things that some of the mid and small cap stocks have in India is that a lot of them are very closely held amongst families. So you'll have one principal owner who's an entrepreneur owner of the company, and you can actually see some tremendous opportunities. And usually when large caps get cheap, small and mid caps get even cheaper, because I think what you are looking at is you're looking at sort of a global liquidity crisis. So when people pull money out of a market and it affects all the way up to the largest companies, the smaller you are, the more likely it is that it's had a very negative impact on your stock price. So things like price to earnings ratios in the small and mid-cap companies are extremely attractive, in our opinion.
Okay. One of the things we learned from that survey last week was that global emerging markets, consumer discretionary stocks, now I know we can't name names, but sectors broadly, consumer discretionary stocks is what fund managers seem to think is a favorite because they still have a lot of faith in the emerging markets consumer. Do you agree with that?
Well, you know, it's interesting. I think that in India and in China, obviously there's a growing middle class. There's still a tremendous number of very poor. Obviously, India still has a tremendous problem with poverty. Those folks obviously are going to want to see a rise in their standard of living. So I think you can still make the long-term bet in both India and China, both of those large emerging economies, that the consumer discretionary sector will grow over time. The negative impact of the slowdown in the consumer in the United States and in Europe is that demand for a lot of finished goods is going to go down.
Yes.
I think in India's case also you have to worry that the slowdown sort of across all sectors in the United States and Europe is also going to slow the IT sector. And obviously that's where some relatively high income to very high income jobs were, and that's going to be something that's going to slow down sort of the higher end of consumer discretion.
So decoupling really never happened then, that decoupling theory, clearly you don't buy that.
Well, I bought it at one point, but no, I'm afraid that I think that the magnitude of the slowdown, sort of worldwide, just order books were just swept clear. There were no orders for anything. I think that the magnitude of that was higher than most people would have expected, and that in general there was way too much easily available credit. Money was too easy to get your hands on. Apparently there just wasn't as much cash out there as we thought there was, but there was a tremendous amount of credit. So I think that one of the impacts that you've seen is that money was being deployed sort of with a broad net all over the world just to put money to work. But as money has sort of, oddly from an interest rate perspective, money is relatively cheap to get, you just can't get it. So when there was this liquidity crunch, I think it just, really, it sort of put a nail in the issue, which was that there was too much credit out there. People were over-leveraged and trying very hard to put all that money to work.
Okay, infrastructure, we're told, is industrials, we're told, the least favored sector because there are doubts about infrastructure spending across the region. Do you agree?
Well, I think if you are in India, or if you visited India, or if you've visited somewhere other than just coastal China, I think you are sort of hit with the fact that there are tremendous infrastructure needs. If I were recently elected, we've seen this in the United States, we'll probably see it in India. If you're recently elected, one of the things that people are going to look for is they're going to look for better roads, better rails, better telecom, better, in India, electricity infrastructure is obviously very important. And also, in India, the sort of automotive culture has taken hold. But city to city, it's very hard to travel. And there have also been some issues with pushing toward sort of an E5, E10 ethanol blend in gasoline. All of that takes a tremendous amount of infrastructure. You can't get those liquid products around very easily. Obviously, trucking them requires roads. Pipelines for ethanol are very expensive. The rail infrastructure needs to be improved. So overall, I think that, again, these are long-term plays. If you want to believe in either India or China, you have to believe that there's going to be tremendous amounts of infrastructure investment.
Okay, great. Thank you so much for joining us. We hope we'll see you again soon. Thank you so much for your time today.
Thank you very much.
Well, that's all the time we have.